Happy Tuesday out there, folks. This is Darius Dale here to present our macro minute for Tuesday, July 5th, 2022. Hope everyone who partook had a wonderful, safe, and enjoyable 4th of July holiday. But guess what? Back to business this morning. Asset markets, stocks down, commodities down, crypto down, dollar up, global bond yields down. Guess what that all those D's stand for? That is deflation. It continues to take share from a market regime probability standpoint. And I have a sneaking suspicion that by the end of the month, or certainly by the middle of next month, we're likely to be in deflation from a market regime perspective. And guess what? That's a little bit different than a lot of what you guys are very levered long and still in terms of your portfolio construction, energy specifically. So anyway, moving on to market moving headlines, short-term gain for long-term pain. That seems to be a general theme of the Joe Biden administration. Not to pick sides politically here. This is a very apolitical show, but it is what it is. Janet Yellen and China's Li Hua discussed U.S. sanctions and tariffs in a video call after reports Joe Biden is close to rolling some of the tariffs back. It's very similar to the talks around supply, price caps and things of that nature. Again, tends to give you short-term gain for long-term pain, but that's neither here nor there. Liu He reportedly said lifting the levies and fair treatment of Chinese enterprises are areas of concern, obviously, and the U.S. called the talk substantive, but didn't mention tariffs or sanctions. So that's a big deal. Anyway, shifting gears here, a reminder that the liquidity cycle downturn is global in nature. So the RBA delivered another aggressive move, hiking rates by 50 bips to 1.35. Yikes, the highest since May 2019 in line with estimates. So that's just keep in mind that we have 80 central banks year to date have hiked interest rates year to date. This is going to be an issue both from a growth perspective, but also from a liquidity perspective. You're going to have a lot of investors, global capital allocators really seeing losses and looking for pockets of liquidity in things that have not gone down a lot. U.S. stocks. Important week for macro catalysts. FOMC minutes on Wednesday. You got U.S. PMI's IM service PMI on Wednesday as well, as alongside the JOLTS job openings data. You got Fed Governor Chris Waller, Bullard, both hawks. They're scheduled to speak Thursday. We'll also get the ECB policy minutes Thursday and maybe help clarify some of that nonsense with respect to the statement and press conference. They didn't really clarify much back then. So hopefully the minutes will give us a little bit more color. We still think that it's all bearish for the euro because Lagarde doesn't seem like she's going to pull a full pow here in terms of fighting inflation. And then lastly, you got the jobs report on Friday for the month of June. That'll be pretty important in terms of the pace of employment growth. Have we seen a significant pullback in the pace of employment growth? Are wages really starting to decline? We've got to just wait for the data. Don't try to guess the jobs report. I spent a lot of time and a lot of hours building models to do that, and guess what? They're all wrong. Big movers: Bloomberg Dollar Index 0.9%, up 0.9% today. To 3.8% on a month-over-month basis. That's a big move in currency terms. 10-year TIPS yield down 8 basis points today to only up 26 basis points month over month. Both of those signals in terms of today's pricing are very much pricing in a significant downshift in growth expectations there, alongside Bloomberg Industrial Metals Index minus 2.5% to off 21% month over month. I mean, you look at pull up a chart of copper, it's telling you that we're heading into a global recession. Bitcoin and Ethereum down 2%. Day over day to down 35% and 39% month over month, respectively. We talked about this on the program, but when you're starting to get into these steep declines, the percentage change math really starts to work against you in the same way that it works for you whenever you're in a compounding state. So be aware of that. Getting to our volatility adjusted momentum signals and probable ranges. U.S. dollar index, that is still bullish FAMS. Not quite in the middle of its range anymore after today's big move, but 0.7% upside with a 1.9% of downside. Gold bearish FAMS, somewhat in the middle of its probable range there. 10-year nominal treasury yield, that is still bullish FAMS, still oversold here. Studying that, studying that very closely this week, particularly as we get a lot of data, a lot of incremental confirmation of certain themes, catalysts, et cetera. I think this is, as I mentioned, a pretty big week for macro capitalists. So let's see how things shake out from a market response perspective. High yield credit spreads, those are still bullish FAMS in the middle of their probable range. S&P 500 bearish FAMS, 2.3% of upside, 6.7% of downside. VIX neutral VAMS in the middle of its range. NASDAQ 100, that's bearish FAMS. You got 4% upside, 7% of downside. Russell 2000 bearish FAMS. You got 3% upside versus nearly 8% of downside. Bitcoin bearish FAMS, minus 11% downside versus 8% of upside here. Ethereum bearish FAMS. You got 7% of upside versus 19% of downside to the lower boundary of its range. Shanghai Composite, that flipped to bullish FAMS this morning. Be aware of that. You got minus 3.1% of downside versus 1.9% of upside. WTI crude oil bullish fams here. Looks like, I mean, you're starting to see the big negative slope here in that probable range. We got that back in kind of the fall before we rebroke out. So maybe we're just getting a pullback here that's investable and viable. But again, as I mentioned, if we head into deflation, I don't think this is something you're going to want to hodl for the next 6 to 9 months. Still long-term bullish, but you can lose a lot of money over 6 to 9 months. And so what we're trying to do is help investors not be long things that go down a lot and be long of things that go up a lot. And then we've tried to do that consistently across, months, quarters, and you stack up those gains, you stack them up. And eventually what you have is a positively sloped, curve of your net wealth, your client's net wealth, that has very limited volatility. That's what we're trying to do. Obviously, go to fall shy of a perfect outcome there. But guess what? That's why we're working so hard, because we want to try to at least achieve for the perfect outcomes. What is it? Shoot for the stars and land on the moon. I think that's something that we're trying to do here at 42 Macro. And then lastly, ag. Neutral VAM still deeply oversold, has been for over a couple weeks now. This is clearly a exposure somebody big is getting out of, or somebody's big is getting out of, in so much that industrial metals, that somebody's big has very clearly been trying to get out of that for several months now. Again, looking like a global growth downturn, and so still deeply oversold. But I mean, clearly it's been hugging the lower boundary with probable range for several weeks now. Someone is very clearly exiting the inflation trade. So with that, Darius Dale presenting our macro minute for Tuesday, July 5th, 2022. Best of luck out there this week. Cheers.